The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Merry Christmas to everyone and to everybody in the whole wide world. No matter whether you think about Christmas or not, it's a holiday season, and try to help some people that have a whole lot less than you. Folks, I posted a chart in here of what's happened when we've had 17% corrections in the past, and as you can see, this is the worst quarter that we've had since, I believe, 1931. It was the worst December since 1931. And you can see we've had some major corrections in here. What I wanted to do now is to show you what happened, you know, after we had these corrections. This is what's interesting. If you go out and look, 1 year, you're up 25%. 3 years, you're up 37%. In 5 years, you're 91%. That's an average. I mean, so I can tell you this. If you remember, way back in late August and early September, when we were getting very bearish here because of all the patterns that we were looking at, I couldn't get anybody to even think about the short side of the market. If you remember, I had two factors in there that I said were 100%ers, that they just, they never failed me yet. And I'll tell you one of them today, and the other one I will save until we're finished with this first leg. Now, you'll notice that the 50% retracement of the low that we made back in October of last year comes in at 2,400 in the S&P, and the 61% retracement of that move comes in at 2,400 also. You'll notice that both of them come together at the same time. Now, I posted this originally in August, and I put those numbers in there ahead of time. So we're heading down to this level right now. Here we are today, and believe me, there is not a soul out there is willing to buy any stocks at all. So what I wanted to do now is to Mr. Dennis Gartman was kind enough to forward this along to me this morning through our good friend Rich Anderson. You'll notice that this is Gartman's head of his letter there. If you look at the upper right-hand corner there, he has his fear and greed index up there, and you can see that we're in the extreme fear. We're almost at 100%. As you can see, last year, 1 year ago, we were at 100% greed, and now we're 100% fear. So this is a half a day session, so it's going to be very thin. It doesn't take very much to move the market, but we're going to find out whether it's going to hold these key levels that we're looking at here today, because they are exceedingly very key. Now, I did last Thursday, when we had the day before that full moon, I issued a buy signal on the Russell 2000 right after the opening. It started really nicely, and 2 hours later we risked less than 0.5% on that, because we knew that it had to hold the 1.618 ratio at that I believe it was 143 level. I'm not sure the exact level, but we were out of it with a little more than a point loss, because once it fails those 1.618 levels, it certainly looks like it wants to go a lot lower. So, by the way, we have a really good guest again today. Mr. Tim Bost from Financial Cycles Weekly will be on. He's an astrologer from Florida, down by the Sarasota area. And he'll be our guest at 9:30 talking to us about some of these things. Now, I wanted to mention to you just a little bit here. This also comes from our friend Rich Anderson. It's a picture of what's been happening in the corporate bond market. You'll notice here in 2008 where we were with the amount of money that they had in there. It was just about $3 trillion. And you can see where we are now, almost at $8 trillion. There's where the problem lies, folks. It's in the lending. That quantitative easing, the thing that they told us was so great, is now coming around to bite us on the kabuki, because they've got to unwind this stuff and money is going to be hard to come by. That means rates are going to go higher. Now, bonds are up today. They just made a Gartley on a hourly chart up there at that 145.10 level, I believe. And this might be the top port or not, I'm not sure. But we are over some really key spots here in the market, as those of you that follow the letter and stuff know that we are just really, really critical levels. I'll share one with you right here because we just hit it just a minute ago. This is the chart of the Dow E-mini, and we have that 1.618 expansion there at 22,300. I believe we're trading a tad below that right now, but that was the 1.618 expansion of that move. So that's it. Again, this is a very thin day. I mean, this is most of the Wall Street people are not there. The big wigs are certainly not there. There'll be some subordinates, but my experience has told me that there's not a lot going on. The days when I worked at Drexel those 6 years, the holiday season was really very, very festive. And the one thing about Drexel that not many people know is they were very, very philanthropic folks. You were expected to, you got a Christmas bonus, and you were expected to give a big chunk of that, to charity, and everybody did. And it was really, really a festive area. There were 30 brokers in our area. There were 26 brokers in the stock section, and there were four of us in the commodity section, 20-minute and I, and Ernie and one other person that was with us for a short period of time. It was basically the three of us that ran it all those years. And but of those brokers, of the 26 out there, there were 22 Jewish brokers. Dora Chan was Chinese, and then we had two brokers that were, one was, I believe one was a Mormon, and I can't remember with you. I think it was just a regular Christian. But anyway, it was very, very heavily ethnic, and it was really great because we had not only do we have Christmas, but we also had Hanukkah, and they celebrated Christmas more than the Christians did because we had a big Christmas tree, and there was always lots of presents for the kids, and they really gave a lot of money to charities, folks. And we were not only that, just give the money, we had to deliver the stuff. I mean, not only would you have to say you wanted to give $1,000 or whatever you're giving to whatever, you had to deliver the goods or the clothes or the food. You had to deliver it. It wasn't just sitting to write a check, say here, somebody do it. No, they made you get out into the thing and really really made people realize that it was important to what you were doing, and that stayed with us for a long time. I was used to that because my mother was that way. She used to make cookies, and we didn't have any money, but boy, could she cook. And she would make cookies and cakes and stuff and take them to the nursing home there in Terre Haute, Indiana, and my sister and I would tag along all those years, and my sister still does it, believe it or not, 70 years later. Okay, let's move on to some of these other markets. Here's another market that is really, really close, folks. We're sitting right there today at 60. Let's get the number up here. You'll take a look here at the NASDAQ. There's the 1.618 number down there that comes in right at 60,010. And we broke 6,000 just a little while ago. I don't know where it is now, but we broke it just a little while ago. So we're going to be opening lower. Whether we close lower or not, we'll wait and see. Stay tuned for a Christmas present. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're going to take a look at a little pattern that's really interesting here. This is Apple on a 4-hour chart going back for the month of December. You can see that we've had a very nice ABCD structure on the way down. It's the AB leg is equal to the CD leg. We're trading, the number I was looking at today was 149.15. We're trading 40 cents below that right now. You only want to buy Apple, folks, if it's above 149.15 in the first hour of trading. It must be up above 149.15. It's got to be above that open. And if it's filled, you put your stop right below whatever the low of the day is by about 20 cents. So your risk on this is only going to be $1 a share. Now you're trading $150 stock for $1 a share, but if it's right, and this is a bottom down in here, the first objective on this is 15 bucks higher. So you got a 15-to-1 risk-reward ratio. But let's go through it again slowly so that you understand what I'm trying to say. We have an ABCD pattern completing during the month of December. The time down from A and B is equal to the time down in C and D. The price level between A and B is equal to the time level of C and D. Last night, pre-market, we were trading at 151.20. With the market weakening, we came down and made new lows. The number that we're looking at again is 149.15. You can see it over there in dark black letters on the far side there. You must be above that price in the first hour of trading. If you're not, you don't do the trade. It's that simple. The opening price will be your friend in this condition, so you have everything going for you that could possibly happen. Will that guarantee anything? Absolutely not. But this will give you the highest probability, the best risk-reward payout that you're going to get using pattern recognition. Unfortunately, it doesn't work all the time, so pay very, very close attention. It's 149.15. That's what you've got to be watching. So that's the key level that we're paying attention to, and we'll see. We haven't opened yet, but we're still weakening. We're testing these 1.618 levels, and folks, if these things fail, you know, there's a lot of talk on the internet of a possible crash. I don't see that coming, and for one of the biggest reasons for me not seeing a crash coming is there's some pretty smart people out there, and if you look at that volatility index, it's really not doing very much. Stop and think that the Dow Jones was down 600 points on Friday, and we barely took out the highs of Thursday. And you can see the ABCD structure takes us up to around 35 in the VIX index. We could easily do that today with a really bad day. But, you know, we have said ever since the summertime that you want to be long volatility because this is going to be changing now. We've gone periods with no volatility, and we bought that right below $10 in that VIX index. And we said to hold on to that because it's got a chance to have something, you know, really big happening. It's been our longest position in the 24/7 series, so that's what we're watching here. So we'll have to pay attention today because of the fact that it's very low volume. I believe we closed 3 hours early. I know you guys out there know that exact answer, but I believe it's we close at 1 o'clock today. If I'm not sure, so we'll say that the price Gator is the price is 149.15, not 149.50. 149.15. That's the end of the ABCD pattern. That's the perfect scenario where it gets to 149.15. That was where AB equals CD in price and time. And right now we're trading about 40 cents under that 149.15. Not 149.50, 149.15. I know it's just a few cents, but this is a trade that you got to manage to see if it's going to be right or not because you got so many things going. But it's got to be above 149.15 in the first hour. Now, what I will be doing is I put a buy stop in there to buy it at 149.20. That means it's got to get above there. So if it gets above there, then I know that I'm above the open, and I can just put my stop right under the low of the day, whatever that is. Right now, I believe it's 148.70 or something like that. I don't know up to date where it is, but that's what I'm looking at. This is what I'm looking at today. It looked very interesting. And we'll see if it you know, works the way that we're looking at. 1 p.m. I was correct. Thanks, David. I knew you knew all those things. David, you know, one thing that you could help everybody with is the next time you do your show is to post when those times are. You know, we close at like 4:15 in the afternoon for the E-minis and the bonds and gold and all that stuff, and then they reopen. The reason why they do that is they do the clearing. And then the Merck members do their clearing trades and figure out margin and all that other stuff. So that's interesting to know that. But they're all a lot different. That's the main thing. That's one advantage of Forex is that they have some set times of 24 hours. Now, the overall market tomorrow night after Christmas, on Christmas Eve, they'll be looking at the Asian markets, and they'll also be starting to look at London. But London will be pretty much closed because it's Boxing Day on the 26th. So that'll make it very, very interesting. We had a question today about, again, about Bitcoin. Folks, if you'll remember in Bitcoin, we were looking at the big ABCD pattern to come in between 4,000 and 3,800. We got as low as 3,200. We're now trading just above 4,000 right now. We've been down almost a solid year. It was this time last year that we were trading almost at 20,000 in Bitcoin. And now we're trading at 4,000. So that's it. And the open interest in that contract has done very, very little. We're still at around 3,000 open interest, and we had 2,000 after the first 2 or 3 weeks, and it never went anywhere. So there weren't a lot of people selling it, and there weren't a lot of people buying it. So that doesn't mean that contract can't turn into something golden, but right now it hasn't. When the S&P 500 started in April 16th of 1982, there were virtually nobody in the pit. Everybody was in T-bills, Jenny Mays, currencies, and gold. Nobody was in the S&P pit. Leo Malamed had to go in and pull people out to go in and get their pictures taken, you know, for the newspapers and all that stuff. But then in August, when the market bottomed on August 9th, 1982, away it went, and history has now shown that we've got as high as 2,900. Boy, that's a long way from 103 is where it opened. So we'll pay sort of attention to that. We'll be looking at it. Also, I wanted to bring to your attention that we've talked about the banking index is the real problem in the market. And one of the things that we've shown here several times is this chart of Lehman Brothers and Deutsche Bank showing the correlation. And we are now trading below $8 in the Deutsche Bank. If you remember, we had a 1.618 expansion there at 853. The low, it got as high as $9 after that, and now it's trading below that number. Again, that's why the 86, excuse me, that's why that 823 was so important, that when it rolls over, you'll see. David just told us today that the bond market closes at 2 p.m., so it'll be open an hour later than the stock market. But believe me, there is very little going on in New York as far as volume, folks, and markets can move a lot on no volume, especially if a little fear comes into it, and we've got more than a little fear out there today. You know, they're really hammering this thing. So we've got Apple. My alert just went off. We're now down at $1 full from the price that I wanted to buy at, but I'm not buying it until that first hour. It's got to be above that opening, folks. We're trading at 148.18. We'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN has launched our best sale of the year. The Tiger Dollar end-of-year sale runs through December 31st only. And right now, you can get up to a 40% bonus on whatever you spend on Tiger Dollars. We've doubled the normal bonuses that come with Tiger Dollar purchases. And the best part is, whether you're a new subscriber or you're already subscribed to any TFNN product or service, Tiger Dollars never expire and can be used for any TFNN newsletter or service. We've redesigned the new TFNN website to make using Tiger Dollars as easy as possible. Once you apply them to your account, they'll be used for all recurring transactions going forward automatically, so you have nothing to worry about. For you current subscribers out there, this is a no-brainer. Go get your Tiger Dollars now and lock in added savings on all your subscriptions. Remember, this sale ends December 31st, so get your Tiger Dollars right now before this deal passes you by. And Happy New Year from all of us at TFNN. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and guess who we have as our guest today? Tim Boss, Sarasota, Florida, Financial Cycles. Tim, happy holidays to you and your lovely bride.
Thank you so much, Larry. Happy holidays to you. Hope you're doing well.
I'm doing well, and I absolutely love this first chart with the S&P 500 and the planetary sequence, because this is stuff I really believe in. I don't understand a lot of it, but why don't you tell us what you're looking at here?
Well, the more we look at it, the more we don't understand, right? So what we're looking at here is a chart of the S&P daily price bars going back to earlier in the year. And of course, we saw the big downturn in the S&P starting on October 3rd. That was the trading top. That was just a couple days shy of Venus going into retrograde motion. So we were watching that pretty closely. The interesting thing is Venus doesn't go retrograde too frequently, about once every 2 years or so. It's kind of a rarer phenomenon in the markets. And Venus finished its retrograde phase, went back direct on November 16th. Now, the unusual thing about that was that on the same day, November 16th, that Venus ended its retrograde phase and went back to direct motion, on the same day, Mercury went retrograde. Now, most of us have heard a lot about Mercury retrograde over the years. It has, certainly gotten our attention because it happens about 3 times a year for about 3 weeks each time. It was the subject of our book on Mercury, Money, and the Markets a few years back. So we've done a lot of study on the Mercury cycles, but this is a rare phenomenon for Venus and Mercury to make simultaneous stations on the same day. So it was kind of like a tag team wrestling match going on there. The one guy jumped out of the ring and the other one jumped in, and Mercury continued to push the markets lower. Now, Mercury went back into direct motion, but we technically don't finish up the Mercury retrograde phase until Mercury gets back to the place where it started on November 16th with its retrograde motion. That occurs today. In fact, about 3 hours from now, more or less, Mercury will actually get back to that exact point. So what we're looking at is this as a potential signal for an end to the big sell-off that we're seeing here, at least in terms of a trader's perspective. And that's the perspective we take, of course. We're looking here at the potential trading bottom hitting in about now. It may be today. Of course, we have a shortened trading session today, so we may actually have to wait until Wednesday when the market reopens after the Christmas break to see some of the upside action. But we believe that this is a justification for having some positive expectations in terms of prices going up in the equities markets.
Wow. Boy, I tell you, Tim, it's really hard to find anybody bullish out there now. I mean, back in October, everybody was bullish, and now, a couple months later, everybody's ready to throw in the towel. I've never seen so many emails from people saying, they're expecting a big crash this week, and I certainly don't see it just by looking at the volatility index, and I'm also looking at some of the cycles like you're watching along with some price patterns, but boy, they sure got the fear instilled in those folks. Tim,
well, what's the old saying about blood in the streets and the fear being rampant? That's the time to jump in, right?
Yeah, that's right. Warren Buffett himself. Hey, listen, you have a chart there. The next chart is on the solar ingress, and we're into Capricorn now. Do you want to tell the folks what you're looking at here?
Right. What happens, of course, is when we talk about a solar ingress, it's simply the sun moving from one sign of the zodiac to another. It does this 12 times a year in very predictable fashion. We pay particular attention to the what we call the cardinal ingresses, the sun going into the signs of Aries, Cancer, Libra, or Capricorn. These are the points that mark the beginning of the 4 seasons of the year. And so we pay particular attention to those dates. This is something that W.D. Gann liked to put a lot of attention on in his work, and so we kind of got the inspiration from him. But this chart is based on the S&P price history. We've back-tested this for the last 60-odd years with the S&P, and this is an aggregate chart. That center line with a 0 on it is the date of the winter solstice, or the sun's ingress into Capricorn. That occurred on Friday, and our expectation was that we'd begin to see a little bit of upward pressure kicking in just before Friday there. And these the hashtags across the bottom are calendar days, not trading days on this chart. So what we're looking at here is we're coming in at about that positive 5 mark on the right side. This we look at as confirmation of the potential, at least, for a trading bottom at this point. And it supports the idea, at least, that we can see higher stock prices ahead.
Well, that makes really good sense. This is really interesting. In fact, that you're coming on in a day when we're at Christmas Eve, when you're expecting this Mercury scenario to unfold. It's really very, very interesting. We have one other question before we get to the next slide, Tim, and that is,
Sure.
do you do the chart of the president, Donald J. Trump? Do you do anything astrologically with his chart?
We do look at occasionally, but personally, I tend to stay away from it because there are too many tweets and too much distraction from the other things I need to pay attention to. So I'm always hesitant to throw my tweets into the mix on that one, but it's certainly a consideration, and the man's definitely under a lot of pressure with or without the astrology, right?
I think you've been a politician maybe in your other life, Tim.
I'll be running next year. Who knows?
Yes, we're either from them or with them. Who knows? Listen, the next one we're looking at here is another one that looks pretty interesting. This is the forecast that you're looking at up and through April. You want to tell us what you're looking at here and how this is derived?
Basically, what we're doing is combining cycle analysis based on the 25 most dominant cycles we can observe in the S&P. The black line is simply a price line for the performance of the S&P over the last few months, and then the red line superimposed on it is our cycle work based on that. And of course, we're more interested in what's coming up ahead. And again, based on the cycle work, it looks like we're in for a trading bottom at this point. So we're taking that as further confirmation. Looks like the cycles are likely to head up here to that number 1 point, which is coming up on the 5th of January. We have a solar eclipse. It's very, very unusual, and we think that's going to provide a short-term trading top there. On the number 2 spot is a conjunction of the Sun and Pluto on the 11th of December. Looking for a little bit of price consolidation into that, a slight pop back upward to that number 3 place, which is the lunar eclipse. This is a total lunar eclipse that comes in on January 21st, and then a double bottom completing there on about the 25th of January, when we have a trine between Mars and Jupiter. That's a 120-degree angle in the sky. We think that's going to trigger a short-term rally into mid-February. So, for a couple of weeks there, it looks like a possibility of a good swing trade to the upside. We're looking for that to peak on the 13th of February, when we have Mitos going direct, and I believe there's also a Mars-Uranus conjunction that same day. So that's a pretty powerful day. We're looking at that as the approximate date of a turning point to the downside, with a pretty sharp decline going all the way into mid-April, when Jupiter goes retrograde on April the 10th. That's point number 6 on the trading chart. So what we're doing here is doing our cycle analysis.
Steve, hey, Tim, we got to pay a few bills. Come back. I want to talk to you about your Eclipse webinar that you're going to be giving.
Okay, thanks, Doug.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're back, and I wanted to post this thing for your webinar that you're having, a free Eclipse webinar.
Right, Larry, we're going to be doing that this Friday, in fact. After the market closes, I think it's at 5:30 Eastern will be the time on the webinar. But it's a free event, and folks can sign up by going to bit.ly/DCSE, that's all caps, and 12/28 for the date. So try to make it easy to remember if we can. So,
what's your feeling on the cryptocurrencies here?
Well, it's been a very, very interesting few months. I continue to be long-term bullish for the cryptos as I look at things. And it's interesting because in our book, Bitcoin Astrology, we looked at some of the cycles at work with a real strong caveat attached because we only had about 6-7 years of backtesting availability in terms of market history. And so we try to base that work on the market history. And some of those shorter term cycles have held up, some have not, and so we're reevaluating here, but we still believe this is a good buying opportunity for those who want to hold on for the long term, and in terms of the trading opportunities, it continues to be a pretty challenging market to trade intelligently.
I remember when you were on last year, it was around this time that they were bringing a thing out at the Merc, for trading in the Bitcoin. It was trading at 19,500, and you were actually warning people it was a little pricey up in that area. So that turned out to be the case. Listen,
I want real classic bubbles there, actually.
Yeah. I want to thank you for being on, and if it's okay, maybe in the middle of the second week in February, we could have you back on again to talk about some of these cycles that we've been talking about here. Would you be able to do that?
That would be absolutely. Let's plan for that, okay. Especially as we have that planetary station that we flagged there on that last chart, anticipating a trading high around the 13th, 14th of February. So if we can get in pre-Valentine's Day, maybe we can talk intelligently about it. Who knows?
Hey, listen, happy holidays to you and your bride.
Thanks
I really
to you, Larry, to you and yours. Have a great holiday, everybody. Bye.
And God bless. Tim Bost is Financial Cycles Weekly, Sarasota, Florida is where it is, right? Let's take a quick look here. We were looking at Apple this morning. The actual place we said to actually be a buyer of this if we were higher than 149.15 in the first hour of trading. We were trading 15 minutes. We're trading at 149.02. The second way to do this was to enter it at 149.15 on a stop. If you did that, you only run a risk $1. You're trading $149 stock. You do not run a risk more than $1 because it's either going to be right away or you're going to be out of it. It did rally as high as 150 after that, but that's just a point. It's very, very choppy in here. The volume is very, very small. compared to normal, but we are breaking below the 1.618 expansions in the Russell and also in the NASDAQ, and that is not a very good sign, as we well know. I believe this is related to the lower volume, but I don't really know for sure. Folks, long term, I'm extremely bearish, but short term, I really think we got a chance here for a tremendous rally that's going to just really shock some people. But that again, that's just my opinion, and I'm not even sure that. Look what's happening in the crude oil market. It continues to go down. We've now broken the 78% level in crude oil. That was incredibly important, folks. We posted that in the newsletter. We talked about it. The fact that we really got moving in that area is really we've broken down below it. You can see it here. We're trading $1 below the 61% retracement in crude oil on the weekly basis, and we're seeing the same thing in the heating oil and gasoline. They're all doing the same thing. And as far as the U.S. dollar, we're having a little bit of a rally here. In the euro again, it got all the way back to that 114.32. If it gets above 115, you're going to be looking at some pretty serious ramifications as far as what the dollar is going to be doing, because it doesn't take much to break that dollar down and the euro to go higher. We posted this morning. You'll be able to see this, what this U.S. dollar index is doing, and boy, we're at the proverbial moment of truth there. In fact, I believe we've taken out that low at 95.70. And if we get much below that, that's going to negate that ABCD pattern. The key number, though, for those of you that are watching currencies, is that 115 level in the euro. We take that out. That tells us something very significant. That means if we close above there, that is a very bullish sign again. But remember, I'm a technician. I don't know. I haven't seen anything over here. You don't get any news as far. You might get something or there, but you don't get hardly any news about the elections or all the other stuff that everybody in the United States thinks is important, and the rest of the world, they don't think it's important. So that's a key thing to remember also. But the fact that these crude oil contracts are breaking down in natural gas, and even natural gas got hammered. It opened higher last night, right at the 78% level, up at 378, and it's already $2,000 below that in the first few hours of trading today. So that's another thing. The problem that we're having in the market, folks, is that banking index. That's the real problem. There's something not right, and I don't know what it is, but these banks are having a big problem, and they know, these are insiders, they know what's going on in there. Here's where we are in the banking index on a really long-term basis. If we take a look at that here, you'll be able to see here that we're probably going to be pretty close to 80 this morning would be my guess, and if we get below 80, wow, I don't even know where it opened yet, but if someone gets the opening of the banking index, let me know, because if it opens below 80, that would be a real negative sign. But we've already showed the Deutschmark what that means. I mean, that Germany's got a big problem with that bank, folks. They tried to sell the there it's at 81.50. Thank you very much, Basil. Thank you so much. So anything below 80 in that would really be really be negative. But we'll see what happens. The market, Ruby asked me to take a look at natural gas, and I'm going to do that, Ruby, for you, because it's Christmas time, and everybody deserves a present here. So let's take a quick look at this. We'll blow it up, and you'll see what happened. I'll give it to you on a 15-minute chart so you can see the last 5 or 6 days, but you will be able to see that we opened right at that 78% level last night, and there's a big ABCD pattern that will come in here at around 134. That's down about another $1,500. But that probably with today, hey, look, this is holiday time, folks. I don't think I've ever put a trade on Christmas Eve, and I don't intend to start now. So we'll see. If you did see, son of a gun, this is what I'm trying to say here. If you bought the Apple on that buy stop at 149.15, you should be out of that now, because that's a dollar risk. We went up there. My original. You had to be higher in that first hour of trading. That's why that opening price is so very, very important. So you have to be above 149.15 in that first hour of trading in order to to trigger the move. Now, I know some of you bought it at 149.15. You should be out of that with $1 risk. That's you look at Ebenezer Scrooge and you say bah humbug on that one, but we'll see. Anyway, 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have broken below all of the 1.618 expansions that I was looking at. That was in the Dow Jones, the Russell, and then also the NASDAQ. All of those have broken. The New York Stock Exchange Index has not done that as of yet, but it's probably just a matter of time here, given the fact that there's so much selling coming in. On a day, there's very little volume, so we'll have to wait and see what that happens. We should be over a major low here, but fear is much harder, or bottoms are much harder to pick than tops, because fear is a greater emotion than greed, folks. You have physical characteristics with fear that you do not have with greed. You have that diaphoresis or sweating. You have your dilated pupils, chalkiness in your mouth. As a matter of fact, as I look into the mirror today, I see every single one of them. So we'll see and I don't even have any positions on. So we'll have to take a look at that. Watch the Canadian dollar very, very closely here today and tomorrow, folks. We've got a big ABCD pattern up in here. and then you'll be able to see if this is going to get up here. We need it to be 136.50. We just hit 136.10. We took out Friday's high by just a tad, but at 136.50 we come into some pretty serious things to take a look at. Now I want to leave you with one very important message, and that is Merry Christmas to everyone, and try to help somebody. There's folks out there that are really hurting. Some parts of the economy are doing better than others, and if you see somebody that looks like they're in major distress, you know, shave a little bit off the ice cream cone that you're going to have and help some folks out, because they're all in a lot worse trouble than we all are. But I do want to wish all of you a very, very Merry Christmas. It's fun being here with you each day at Tiger TV. And remember, you got the Tiger dollars, folks, so if you get a chance to use those, I would certainly use them. But be good to everybody, because we all live on the same planet, boys and girls. We don't have any choice about that one. So just remember, Merry Christmas.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.